Trade isn't the only theme in town this week, even if, as it begins, it might feel like it, and could do so again on Thursday. That's when the US releases its latest trade and trade deficit data, which will put into focus the scale of its standoff with China. PMI data earlier in the week may serve as the economic damage report, and not just for China.
The longer these trade wars go on, the more damage it's going to have. So we've seen it in emerging markets earlier on this year. The European data throughout the course of this year has been softening.
For oil markets, it's a waiting game as OPEC prepares for what may be its biggest decision since early 2017, when it began cutting crude output to boost prices. That worked, say analysts, until a recent sharp slide saw Brent tumble from $86 a barrel in October to under $60 last week. Russia has reportedly accepted the need for cuts, and a target of 1.4 million barrels per day is seen as possible, if not necessarily sufficient.
There is still clearly oversupply. It's unlikely that they'll be able to do too much for the oil price to regain its more recent highs.
And markets may look to Jerome Powell to be Mr. Popular again after his dovish comments boosted share prices last week. The Fed chairman testifies before the Congressional Joint Economic Committee. Any hints of doubt over the strength of the US may be seen as another signal that the FOMC wants to ease back on its tightening plans.
We've seen now for some time that growth is very strong, that unemployment is very low. The Federal Reserve has done a good job in the last few years, despite receiving huge amounts of criticism.
Finally, on Friday, the big one, the US November jobs report, expected to see a rise of 205,000 in payrolls. Anything significantly less, and the feel-good factor of the Fed may soon fade.